welcome. Today, we're diving into some really interesting stuff happening with Ethereum.
Yeah, lots going on.
We've looked at market data institutional reports, quite a bit actually, and we want to figure out, what's really pushing Ethereum right now? What are the numbers telling us about where it stands, and what could that mean looking ahead?
Right.
And honestly, some of the things we found are pretty surprising, like its new global ranking, quite something.
Definitely caught my eye.
Okay, so let's get into it. This information we have really paints a picture of where Ethereum sits in the global financial world right now.
Thanks.
Well, it's quite a story.
It really is. I mean, Ethereum is now ranked 22nd globally by market cap.
22nd globally.
Yep. Think about that. It's valued higher than massive companies we all know, like Mastercard, even Netflix.
Wow. That's a huge milestone.
It certainly is. It says a lot about how it's gaining traction, in the mainstream. And the recent performance, pretty solid. Up about 17% in the last week alone.
17% in a week.
Yeah, the price is sitting around $4,300 as we're talking. Over the last day, it's been between roughly $4,170 and $4,347.
Okay.
And looking back over the week, it went from about $3,560 up to that $4,330 level. So definitely strong upward movement.
That's a significant climb, and it feels like it happened fast, but you mentioned it's still, about 12% off its all-time high?
That's right. The peak was $4,878 back in November 2021.
Okay, so it's climbing fast, but still has that peak in sight. Which brings us to the big question. What's actually fueling this? What's behind the curtain?
Good question.
Because this is where it gets really interesting, right? We're seeing some, frankly, eye-popping numbers coming from the big players, institutions, and whales.
Absolutely. It's like following the money trail, and it leads to some pretty big places.
Okay, lay it on us.
Well, first off, the institutional demand it's record-breaking. We saw over $1 billion, $1.01 billion in net inflows into spot Ether ETFs.
Spot ETFs.
Yeah.
Maybe just quickly explain what those are.
Right. Good point. So a spot ETF is basically an investment fund like you'd buy on the stock market, but it directly holds actual Ethereum.
Ah, okay. So institutions can buy into ETH easily through these regulated funds.
Exactly. Makes it much simpler for them. And the demand was huge. BlackRock's Ether fund pulled in $640 million on its own.
$640 million.
Yeah.
From one fund.
Yep. And Fidelity's F fund added another $277 million.
Wow.
And, these products, people kind of underestimated them at first, but now institutions are clearly seeing Ethereum differently.
How so?
They're increasingly viewing it as, some are calling it the backbone of future financial market.
The backbone. That sounds significant. What makes them say that? What can Ethereum do?
Right. It's not just hype. Ethereum isn't just a digital currency like Bitcoin. It's a programmable blockchain.
Programmable? Meaning?
Developers can build applications on top of it, decentralized applications or dApps, and they use smart contracts.
Smart contracts. Okay.
Think of them like self-executing agreements. Financial deals, insurance, supply chains they can run automatically when conditions are met. No middleman needed.
I see. So it enables new kinds of systems.
Exactly. Things like DeFi, decentralized finance. It's basically rebuilding banking services, but globally, transparently, automated. So when institutions say backbone, they see its potential to underpin a lot of future digital economic stuff.
Got it. That makes the backbone idea much clearer. So that's the institutional side. What about the whales?
Ah, yes, the whales. Also very active. We tracked one entity, for example, that set up 10 new digital wallets.
10 new ones?
Yeah, and within just 8 days, they bought over 312,000 ETH.
Whoa. How much is that worth?
About $1.34 billion.
Billion. From one entity. Where did they get it?
From major liquidity providers, places like FalconX, Galaxy Digital, BitGo. These aren't small retail buys. This is serious, strategic, large-scale accumulation.
Okay, so we have this huge buying pressure. Institutions getting in through ETFs, these massive whale purchases. How does that play out in the market, especially with Ethereum supply?
It creates a really potent mix, basically leading towards what's called a supply squeeze.
A supply squeeze, explain that.
Well, think about it. Roughly 30% of all Ethereum is currently staked.
Staked, meaning locked up.
Essentially, yeah. Users lock their ETH to help run the network, earn rewards. But crucially, that ETH isn't available to be bought or sold easily.
Okay, so a big chunk is off the market.
Right. And at the same time, the amount of ETH held on exchanges where most people buy and sell is near historic lows.
Ah, I see. So demand is surging, but the available supply is shrinking.
Precisely. Less available to buy, lots of people wanting to buy it. Classic supply squeeze dynamic.
Interesting. And are companies buying too? Or just investors?
Oh, companies are definitely involved. Bitmine Immersion, BMNR, is now the largest corporate holder. They have over 1.15 million ETH.
1.15 million. What's that worth?
At current prices, around $4.9 billion. And get this, they added 317,000 ETH in just 1 week recently.
That's incredible corporate conviction.
It really is. And one more piece of data reinforces this. The long-term holder NUPL metric.
NUPL. Okay, what's that tell us?
It basically measures the unrealized profit of long-term Ethereum holders. And it's moved into the belief zone.
Belief zone.
Yeah, it signals that most long-term investors are sitting on significant profits but are holding strong. They believe the price will go higher, so they're not selling.
So they're digging in, which tightens supply even more.
Exactly. It all feeds into the same narrative. Strong demand meeting constrains supply.
Okay, so we have all this activity, institutions, whales, staking, low exchange reserves, holders believing. What are the charts actually showing us? The technicals.
Good question. The technicals are definitely flashing some signals. ETH is trading above its upper Bollinger Band right now, around $4,344.
Bollinger Bands, those show the typical price range, right?
Yeah, think of it like an envelope. Pushing the top suggests strong bullish momentum, but
There's always a but.
well, it can also signal overbought conditions. The price has moved up very fast, maybe too fast to sustain without a pause.
Makes sense. What else?
The RSI, the Relative Strength Index, is at 73.
And above 70 is usually considered overbought.
Typically, yes. Again, it suggests the recent rise has been very rapid compared to history. Doesn't mean it has to fall, but it's a warning sign for consolidation.
Yeah.
Also, the Bollinger Bands themselves are wider now.
Wider means?
More volatility, the price swings are bigger, the market's more active, maybe a bit jumpier.
Okay. What about derivatives, people betting on future prices?
Yeah, that's interesting too. Open interest, the total value of outstanding contracts on Binance alone is at $10 billion for ETH derivatives.
10 billion. How does that compare?
That's up 46% in just the last 30 days, so a lot more activity there.
Okay.
But here's the twist.
Yeah.
The number of short positions.
People betting the price will go down.
Exactly. Those have jumped 500% compared to last year and up 40% in just the past week.
Wait, 500%? While the price is rising, that seems counterintuitive,
It does, doesn't it?
which makes you wonder, could this set up a short squeeze?
That's exactly the possibility it raises. If ETH keeps pushing up, say, decisively above $4,400.
All those short sellers get squeezed.
Precisely. They bet against it, but if the price goes up, they start losing money fast. They're forced to buy ETH back to cut their losses.
And that forced buying pushes the price up even more.
Exactly. It can create a very sharp, rapid price increase, like adding fuel to the fire.
Okay, so putting it all together, the inflows, the whales, the supply squeeze, the technicals, the short squeeze potential. Where might Ethereum be heading? What levels should people watch?
Well, looking immediately ahead, there's resistance right around that upper Bollinger Band near $4,344. Then a potentially tougher zone between $4,400 and $4,450.
And if it breaks through that?
If it can close firmly above that $4,450 level, then the path could open up towards $4,800, maybe even testing that old $5,000 all-time high area.
Any longer-term projections?
Some analysts using different models like pricing bands are looking even higher. Targets like $5,210 or even up near $6,946 have been mentioned.
Wow. Ambitious. What about downside, if it pulls back?
Key support seems to be around $4,150 to $4,200. If that doesn't hold, the next major level could be down near $3,950.
And how do analysts come up with these targets? It's not just guesswork, right?
No, not at all. It's usually a combination of things. Technical analysis, looking at chart patterns, indicators like we discussed.
Right.
Then there's on-chain analysis, tracking wallet activities, staking, how much ETH is on exchanges, that kind of thing.
The supply and demand flows.
Exactly. And finally, macro analysis, the bigger picture. Interest rates, global liquidity, institutional adoption trends.
And bringing it all together.
Right. But it's crucial to remember these are forecasts based on current data and trends. They're not guarantees. The market can shift quickly because of big economic news or policy changes. Probabilities, not certainties.
That's a really important disclaimer. Things can change fast. So, thinking about that macro picture, what else is going on that's influencing things?
Well, a big factor is the general expectation around interest rates. Many expect cuts eventually, or at least looser liquidity rules.
And lower rates usually mean more money flowing into riskier assets.
Historically, yes. That capital looks for better returns, and crypto often benefits. Plus, there's ongoing talk about retirement funds getting more access, other institutions allocating capital as more regulated products like ETFs become available.
So potentially more ways of money coming.
Potentially. Also think about new crypto-friendly laws popping up, more ETFs maybe launching, potential changes to bank rules, even just the huge amount of cash sitting on the sidelines in money markets right now. All that could find its way into assets like Ethereum.
And how does this compare to past cycles? You mentioned a big drop in late 2024.
Right. The altcoin market overall hit a resistance level then and fell sharply, about 50%. We're approaching similar valuation levels now, but the context feels different.
Different how?
There seems to be much more liquidity this time, stronger institutional buying, holding things up, and a clearer regulatory environment emerging, at least for major assets like ETH.
So maybe a stronger foundation this time around. Less likely to just collapse?
That's the argument, yeah. It suggests the market might be better positioned for a breakout rather than another harsh rejection, more potential for growth.
Okay, so let's bring this home for the listener. We've covered a lot of ground in institutions, whales, supply, charts, macro. Why should someone listening care about all these nitty-gritty details? What's the real takeaway here?
I think the biggest takeaway is the fundamental shift in how Ethereum is being perceived. It's really moving beyond that niche crypto label.
Right.
It's increasingly seen by serious traditional finance players as a core piece of infrastructure. Maybe even, like we said, the potential backbone of future financial markets.
So it's not just about the price going up or down today.
Exactly. It's about a maturing asset class getting woven into the fabric of the global financial system. That signals a potential for long-term value and utility that's much bigger than just short-term trading.
Yeah, that makes sense. Understanding these forces, the big money moving in, the reasons behind the supply dynamics, the technical picture, the macro weensits, it gives you a much better lens for understanding the whole evolving digital economy, doesn't it?
Absolutely. It helps you see the bigger picture.
You get past the noise and understand the actual currents shaping things. It's like having a map in a fast-changing landscape.
Well put.
So, just to recap, Ethereum's showing real solid momentum right now. It's not just hype. It's backed by huge institutional and whale buying. It's gaining global recognition, climbing those value ranks, and looking towards new highs.
Driven by real demand and that tightening supply we talked about.
Exactly. A pretty positive picture overall, based on what we're seeing.
Seems that way based on current trends.
Okay, so let's leave everyone with a final thought. Considering this idea of Ethereum potentially becoming the backbone of future financial markets, how might its continued growth actually change things? Not just in the digital world, but in traditional finance, maybe even how we handle everyday transactions down the road, something to chew on.